And it's great to have you join us in another edition program Capital Market Live on Channels Television. I'm Ladi Williams. Let's take a look at how your money performed in the week, starting with major markets around the world. Started in the U.S. where it was a good week for U.S. stocks. We saw the close broadly positive on Friday's session as stocks posted their best month since 2020. Also comes as investors digested strong tech earnings and looked past concerns about high inflation and a recessionary environment. The Dow Jones Industrial Average gained 0.97%. The Nasdaq was up 1.88%, while the broader S&P 500 index jumped about 1.42%. In Europe, the markets recorded their best month on Friday as investors digested a fresh swath of corporate earnings and key economic data out of the Eurozone. The UK's FTSE 100 rose by 1.06%, while the German DAX climbed by 1.52%. While France's CAC index closed the day with 1.72% advance. For markets across Asia-Pacific, it's a different picture as they were mostly negative on losses from tech stocks and a stronger yen. Japan's Nikkei 225 dropped 0.05%. The Shanghai Composite lost 0.89%, while the Hang Seng Index was down 2.26% on Friday. And back home at the unlisted securities market, activities at the NASD OTC exchange ended the second week of July in the green as both the security index and the market capitalization recorded a 2.10% advance. At the same time, the NASD market capitalization increased by 0.02 trillion naira to close at 1.03 trillion naira this week. However, the total value of securities traded during the week decreased by 62.27% as the market recorded a total of 33.8 million naira in value against 89.59 million naira in the previous week. Similarly, total volume of securities traded on the exchange dropped by 79.04% to 873,000 units, while deals fell by 14.52%. To close the week. The duo of Niger Delta Exploration and Production and Friesline Campina with top advances in price value, while Central Securities Clearance System and NASD PLC were top decliners for the week. And at the local equities market, investor sentiments ended the final trading week of July with a sharp drop, despite the 1.42% gain recorded on Friday. The market's benchmark all-share index closed the week by 3.10%, while the total value of equities dipped by 869 billion naira, following significant losses recorded in 4 out of 5 trading sessions. Now let's get our discussion on. Now we have joining us from our Abuja studio, Professor Uche Uwaleke, Professor of Capital Market, Nasarawa State University, and President, Association of Capital Markets Academics of Nigeria. Great having you on the show, Prof.
Thank you very much, Ladi. My pleasure being here.
Yeah, so, Prof, it's a pre-election year, and we know elections, have an effect on markets. But first of all, let me get your take on how, the markets closed the week. We saw a lot of sell-offs this week.
Yeah, absolutely. We witnessed a lot of sell-offs in the month of July. Recall that the market was up between January and June. The equities market gained 21.17%. So the month of July witnessed, if you like, profit taking, and that became exacerbated following the some negative economic news that poured in the month of July, beginning with the rate of inflation. Of course, that was made available on the 15th of July. Inflation coming in now at 18.6% from 17.71, in May. And then the response by the monetary authority, the MPC of the central bank, jacked up the monetary policy rate from 13%, to 14%. You recall that took place on the 19th, on a Tuesday. And if you observed, between Tuesday when that communique was read, right up till Thursday, the market was in the red. Okay, so you now realize that the equities market, posted declines posted declines in 13 out of the 19 trading days for the month of July. So it was only on Friday that a breather came when the market appreciated by 1.42%. But of course that wasn't sufficient to erase the red, as it were. So month-to-date return is in negative territory, 3.10%, percent, and you realize that came particularly because of losses in some high cap stocks. Take Nestle, for example. Nestle dropped into as low as now 1,262 naira, and that's even in spite of the result that Nestle released. Earnings per share grew, although very marginally by less than 1 naira. Then you also have particularly the banking stocks. The banking index, of course, dominated by the tier 1 banks, also fell. The likes of Gitco, Zenith, Access, and the rest of them. It was not until Friday actually that we now saw, some appreciation in, Gitco and Zenith, moving from 18 naira 90 to, in the case of, Zenith, 20 naira 70, and for Gitco 18 naira, 95. Of course, we also saw appreciation in UBA. First Bank remained unchanged at 11 naira. So we, as I said earlier on, it was until Friday that we saw, all of that, including movement in the share of MTN, another bellwether stock, from 190 to 200, 200 naira. But before then, it was all losses. And as I said earlier on, coming on the back of the hike in interest rates, coming on the back of high rate of inflation, coming on the back of, again, volatility in the forex market. All these, of course, are underlying factors that drive uncertainty. And of course, that is one market that doesn't like uncertainty. So that's what has happened in the month of July.
Yes, Prof.
Our local market here.
Yes, sir, Prof. So another issue now, it's a pre-election year, and we know, elections have a huge impact, on markets. What can we expect, for the impact on the equities market, seeing that this is actually a pre-election year, elections are coming up next year, and investors would be, look, this will also drive investor sentiment at this point. But what are you seeing?
Yes, absolutely. Of course, our market is not, if you like, divorced from what is happening, globally. As you also know, globally, especially during the first half of the year, markets were in the red. The U.S. market was in the red. The Standard & Poor's, the S&P 500, that's what I mean. The NASDAQ. And the Dow Jones, they were all, in the red in the first half of the year. If you also go to Europe, it is the same story. The FTSE 100, the France CAC 40, the German DAX, and so on. Again, for these markets, it was not until the month of July that we saw some rebound. As a matter of fact, these stocks, S&P 500, recorded one of its best performance since 1939, for July month alone. If you now take for all the months since November 2020. So the point I'm making is that the global events also rub off one way or the other on our markets. If you look at the Russian-Ukraine war, with all its fallouts, the supply chain, the disruptions, and particularly the monetization of the normalization, monetary policy normalization in the U.S. is also going to affect our market. Now, in specific terms, yes, pre-election year, if recent history is any guide, we should expect that the market will tank, in the second half of 2022. If you take the our experience, the pre-election years we've had since 1999, we've had 6 of them, starting from 2002, right up till, 2018, and then now 2022. You now realize that the first half of a penultimate election year, or a pre-election year, is usually up. And that is what, one has observed, 2002, 2006, as I said, up till even 2022, when the first half has witnessed 21.17%, appreciation. But what has happened in the second half of a pre-election year, again, go back to history, from 2002, okay, up till 2018, second half has always been in the negative territory. Of course, except for 2006, and of course, there's an explanation for that. In 2006, remember, we had a deal. The year before then, we had a debt deal, with Paris Club, that of course resulted in the exit of Nigeria from the Paris Club. Over $30 billion, was involved, and London Club about $2 billion. So that impacted the result for 2006. But outside that, and that was what made it, if you like, an outlier. But outside that, every half year, second half of the election year usually results in negative, return, equities market performance. And as I said, except there's a trigger, okay, except there is, if you like, a silver lining in the firmament, if you like, we may still experience that in the year, 2022. And
all right,
it is not unconnected with the tensions and the uncertainties that surround the pre-election year, which manifests very, very much in the second half, when you have primaries, when you have political activities, gearing up. That's also likely to play out in 2022. But of course, the level of the drop in the performance, will be a function of the degree of this uncertainty, the degree of this, tension that we are talking about. Because you find that usually foreign investors, take flight. Although now you can say domestic investors, dominate transactions. But of course, if there is tension, even the few foreign players will leave. You also, of course, won't have capital coming in because of the uncertainty. So all of this impacts the equities market in particular. And usually when you have inflation going up and the central bank is raising rates, what happens is that fixed income market becomes more attractive. Portfolio fund managers, of course, naturally will rebalance in favor of fixed income. So usually that affects the equity market. And I noticed that in particular, the month of September, has been the worst hit over time, pre-election years, because the trend we'll have now is likely to, I mean the recovery, the rebound, will linger as long as the earnings are in. We're in an earnings season. But once we get to September, okay, that may fizzle out, and then you begin to see the market tanking.
Right. Okay, Prof. So I guess at this point,
things go normal. We expect that by January, yes.
Okay, so Prof, I guess we should expect, more sellers for now, even though we're seeing this little bounce, that happened on Friday. But we'll continue the conversation right after the break. We still have Professor Uche Waleke with us. Stay on. The conversation continues right after this break. Welcome back. Still watching Capital Market live on Channels Television. Let's take a look at what made headlines this week in the news. See, the Lagos Commodities and Futures Exchange officially began real-time trading on gold for the first time in Nigeria, as well as 12 other major commodities. Comes after the LCFE received license from the Securities and Exchange Commission to operate at its trading floor in the country's commercial capital. At the commissioning of the exchange this week, the governor of Lagos State, Bajide Sanwo-Olu, and the managing director of LCFE, Akin Akeredolu-Ale, highlighted some of the significance this development holds for the country's commodity ecosystem.
History is being made with the formal commissioning of the Lagos Commodities and Futures Exchange, which is now being regulated by the Securities Exchange Commission, which is a dedicated electronic trading of Nigerian agricultural products, of solid minerals, oil and gas, and globalizing this trade through partnership with other commodities exchange around the world. But this is not all. In addition, this morning, we'll also be witnessing, more importantly, the gold spot contract series, which is valued at about £100 million sterling. It's comprising gold-backed financial instruments that will be listed and traded on the Lagos Commodities and Futures Exchange. What this means is that these spot contracts can be redeemed at any time for specially made gold coins at designated vaults. We will also be witnessing the launch of the first tranche of a special gold coins for which spot contracts can be redeemed, like what Aki had said. These gold coins will be known as Eco Gold Coin.
I think we've got it to a point whereby other countries in the world that produce crude oil, they have their own energy exchange. That is the next frontier that we're going to be moving into in the next 8 months, because we wanted to settle clearly from beginning to the stakeholders in the gold space, and we have completed that to the extent that today you will see gold that's from Nigeria in bullion form. In bullion form today. And I'm very, very happy that the executive governor of Lagos, Mr. Governor, understands the implication of where gold is traded. If Lagos becomes a hub for gold trading in Nigeria, it means Lagos becomes a hub for gold trading in West Africa.
And to some company news now, FBN Holdings released its financial result for the first half of this year. According to the report released on the Nigerian Exchange, the parent company of Nigeria's oldest financial institution, First Bank, posted a post-tax profit of 56.5 billion naira at mid-year. That's a level never before seen since it's transformed into a holdco a decade ago. At the same time, its gross earnings climbed higher to 359.3 billion naira. Interest income soared to 226.35 billion naira, while the company posted profit before tax of 65.7 billion naira. All right, let's bring back Professor Uche Waleke, Professor of Capital Market, Nasarawa State University. Prof, thank you for staying on. So we've seen a couple of earning reports actually trickle in, at this time. Anyone catching your fancy?
Well, let me start by, permit me to congratulate the Lagos Commodity and Futures Exchange on that feat,
right.
Commencing trading in gold. There's no doubt that that will help to deepen the capital markets. In this country, we are talking about, diversifying export base, focusing less on, petroleum. And, of course, giving attention to other mineral resources. The commodity exchanges we have in this country, if encouraged, of course, will clearly, fill in the gap. In terms of earnings, well, I've had a cursory glance, I would say cursory glance on some of them. I know, for example, Transcorp has released its half-year unaudited results. Lafarge, Seplat, Nestle, you mentioned, FBN, I think Cadbury, and a host of others. The one interesting thing to note is that a majority of them, reported growth in earnings. They also reported, growth in profit after tax. And of course, as I said, I expect that in the days ahead, these corporate results, should impact the, the equities market, positively. Yes, that of First Bank you just mentioned, but up till the end of last week, First Bank was left unchanged at 11 naira. But overall, I expect that the favorable corporate results should help to lift the equities market from where it is now, at least to a level where the year-to-date return exceeds inflation rate. As you know, the year-to-date return has been moderated. The Friday performance moderated it to about 17.92%, but it's still below inflation rate of 18.6%, and that is very critical. We need to have positive returns, from the market in order to engender, confidence, and that also means that it does appear, and rightly so, that the central bank is now, focusing more on its primary mandate of maintaining price stability than on, the output growth. A kind of change in stance, and that is because of the impact that inflation has on not just the financial markets, but of course on the economy in general.
And Prof, let me ask you this, Prof.
Nigeria today is also responsible for the high rate of exchange rate, and all of this impacts the equities market.
Yes, Prof. So it's been a tough.
Of course, they will also affect the bottom lines of companies, ultimately.
Yeah, Prof, it's been a tough first half. We've seen, rising inflation. We've seen the central bank, tighten rates, and, income of consumers, squeezed, at this time. Do you think we'll see, stellar reports going forward?
Well, I think the factors driving some of these, macro indicators, they won't disappear overnight. They will take time to be tackled. Which was why I said that the half-year, second half of pre-election year, poses a challenge. Take GDP growth for example. I expect that GDP growth will come in lower than we had in quarter one of 2022. Quarter one of 2022 printed at 3.11%, and I expect that quarter two will be lower. One, on the back of a high GDP growth rate we had in quarter two of 2021. That's talking about the base year effect, as 5.01%, and then two, the fact that it was in May, if you recall, that I think even in March, that the CBN actually changed their policy stance. There's no doubt that a higher MPR rate will ultimately affect growth. So GDP growth rate in quarter two will come in lower, no doubt. Then you also have the issue of rising prices. What are the factors driving these rising prices? Majorly the energy cuts, scarcity of fuel, scarcity of petroleum products, high cost of electricity, inadequate power supply, weak transport infrastructure. This, if you like, legacy issues, supply side issues, insecurity too, that is affecting, food output. So these are the factors driving inflation. They're more of cost push rather than demand pull. Even though the central bank tells us now that they have evidence that demand for money, is pushing the increase in money supply, that we'll have, which is why they are trying to also use traditional monetary policy tools, to tame inflation. But as I said, that will take quite a while. Take another challenge of the challenge we have, the exchange rate challenge, particularly the volatility in the parallel market. Again, that is one issue that may not disappear, overnight, largely due to factors, in my view, that are exogenous to the central bank of Nigeria.
Yeah, Prof.
For example, we hear the central bank says, for example, the NMPC has not, remitted,
yes, quite
dollars to the.
Yes,
so
yes,
there are
Prof.
factors that actually causing the exchange rate volatility. Many of them beyond, not within the ambit of the central bank.
Right. All right, Prof. Well, still a lot to unpack there, and these factors are still with us at this point. But we'll be looking out for those earning reports that come out next week. Thank you so much, Professor Uche Waleke, Professor of Capital Market, Nasarawa State University, and President, Association of Capital Market Academics of Nigeria. Thank you for giving us your Saturday evening.
Thank you, Ladi.
All right, now here are some key expectations for the capital market as well as financial markets. We start with T-bill space where yields are expected to moderate slightly in anticipation of inflows into the financial system. For the bonds market, the yields will see an uptick in the medium term as both the federal government 2022 full-year borrowing plan and expected fiscal deficit point towards elevated supply. And the money market, the overnight rates is seen trending southwards on expected 480 billion naira fact disbursement and 5 billion naira maturities. And at the stock market, first half earnings season gets into full swing next week, and bargain hunting is expected to dictate investor sentiment and possibly drive positive performance for the market. All right, that's it for the program. Thank you for watching. I'm Ladi Williams. See you next time.